Stuart and his wife Rihanna have spent 2 years saving for their first home.
Since having our daughter, it's been more difficult to save the amount that we need to, which pushes the horizon of when we could buy a house further and further away.
And now the return on their savings has dropped.
Our interest rates this year have decreased on our savings account, broadly in line with the cash rate cuts. We started the year with a 5.5% interest rate on our savings account, and currently we have 4.8%.
With the Reserve Bank cutting the official cash rate 3 times this year, the rates banks will pay on savings has fallen. Canstar's Sally Tindall says there's now just one lender offering an account at 5%.
But there's plenty of catches that come with this account. Firstly, you've got to meet the monthly terms and conditions. Secondly, you've got to be aged between 18 to 29 years of age.
Meeting all the conditions can be incredibly confusing. An Australian Competition and Consumer Commission report found that in the first 6 months of 2023, more than 70% of accounts on average didn't receive bonus interest in any given month.
A competitive rate at this point in time would be 4.5% and above, but you probably, in most cases, need to meet monthly terms and conditions in order to get that rate on an ongoing basis.
Term deposits are another option, says wealth advisor Sulo Kulendran. However, it locks money away for a period of time.
It does seem that the shorter term deposits, offering maybe up to 90 days, that tends to be relatively similar to the longer dated term deposits at the moment. And that just speaks to what the market's outlook is when it comes to the rate cutting cycle that we're in at the moment.
Cameron hasn't put his money into a term deposit. Instead, he's put some of it into a savings account, where he's seen his interest rate fall to 4%.
For the last couple of years, I've had surplus cash, which has been quite useful because it's been in savings, so any interest that I've made has supplemented my income.
He also has a mortgage, but doesn't pay a lot of interest on it because he has offset accounts.
So I was more interested in what the interest rates were doing from a savings perspective.
Ms Kulendran says for those with a mortgage on their home, putting any spare cash into an offset account might be best.
Effectively what it does, it reduces the home loan balance on which the interest is charged. So if your interest rate is say 5.5% and you place some money into the offset, you're effectively getting a risk-free return of that 5.5% for the amount that's sitting in the offset.
The Reserve Bank meets later this month. However, most economists expect interest rates to stay on hold, given the recent stronger than expected GDP data. Instead, forecasts are pointing to another cut in November. Cameron will be eagerly watching, with plans to upsize his 2-bedroom home.
Now with interest rates falling, I'm now looking to probably use those savings to put into a new property.
Meaning he may join the chorus of home loan borrowers cheering any cuts.